Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name is Doc Severson. We got Dave Lukas with us here. Today is Monday, the 24th of July, and we have a very interesting week coming up this week. Let's see if we can count off the number of bombs that we have to get past this week. First of all, there's major earnings coming up this week. So we have things like Boeing and Lockheed Martin and let's see, Microsoft and
Google,
Google and
Meta, Microsoft,
Amazon.
20% of the S&P this week.
Yeah, so this is peak earnings. We also have the Fed meeting on Wednesday. So the policy release and the chairman conference where they kind of roll them out on a gurney and prop them up in front of the microphone. And so we got the chairman conference on Thursday. We have GDP for the second quarter. So this is the first
That's a big
view
one.
on GDP for the second quarter. Are we still good? Are we starting to tail off? We also have jobless claims coming up on Thursday, which is going to be increasingly important because of the fact that the Fed is going to keep pushing until they crush the jobs market. And the jobless claims is going to be the first view into turning down of the jobs market. So that's obviously very important. And then Friday comes along and we got PCE. We have personal income and outlays, which is the Fed's preferred inflation gauge. So I can't imagine a more packed into 1 week. I think there's 4 times a year that we have the Fed meeting coming along with major earnings. And, so we have the streams crossing it's, we're going to get some big volatility. And this is why, I'm thinking it's the calm before the storm right now. So welcome aboard, everybody. If you have any questions or if there's anything that's on your mind, please write it into the chat box. For those of you watching on the replay, which is probably going to be most of you, let us know in email if there's anything that you'd like to talk about for next time. But with that, Dave, what's on your mind? What are you seeing in the market this week?
Similar things as you. This is another one of those pivotal weeks. Now, the Fed's going to be, I don't know if the Fed's going to be as big of a deal as, it has been, because I think, the market priced in 100% a 25 bips increase, right? So I think they're going to do that. And I think they're going to pause after that. I think they're going to do another pause, and it's going to be the same language, data dependent, and we'll see and stuff, but we're getting to the end of the cycle, blah, 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 right? But I think the biggest thing the market has going for it from here is there's no Fed meeting after this till what? September
20th.
Right? So the market's got a reprieve from the Fed for a 2-month window, just about. So I think that's going to be nice. And we'll see what happens with Powell's conference. It always is, every little word people hang on and all that stuff. But I think he's going to kind of hit it down the middle and just say the same thing he's been saying, and, see if they're going to pause the upcoming meeting or hint that, hey, if things continue to go as they are, we'll be able to pause. So I think we'll get that. I think the bigger things this week are going to be the earnings on tech. I think Meta, I think Google, I think, Microsoft, especially after the new AI product that they announced that shot their stock up a week ago, right? All of that's going to be the bigger thing. In fact, if you can pull up a chart of Meta, this is something that I've been looking at this week. If you pull that up and look at the monthly chart on it. So if you don't mind, just pull that up. And it is almost a parabolic monthly chart. So you can see it on there. Look at that thing. Like, it's straight up for however many months, right? And so for me, the biggest thing is they have to be so perfect this week. Otherwise, I think this stock's going to drop. And so if you're looking for maybe just a contrarian play, a little fun, maybe before earnings on Wednesday, like just before close, I think they have a 28th cycle, for the weekly option series on this thing. Yeah, maybe go out and buy a couple cheap, 20, 30 point out of the money puts for the 28th or something on that, just to see if you get lucky. Right. And it's a gamble. It's like going to the casino and stuff. But if you look at that chart, I mean, it just seems to me like everything's got to go right for that stock. And Threads seems to have been a bomb at this point. So, I'm sure they'll tout AI and all that stuff. But I mean, if you look at going to like the 260 on that thing or somewhere like that and picking up a put for a couple bucks or something like that, just to have a little fun. I think that's the stock of all of them that probably has the biggest risk going in this week.
Yeah, but Zuckerberg's been training Brazilian jiu-jitsu, and he's all buff now. So that's got to be worth at least 50% of the market cap right there.
Right.
Yeah. So
well, him and Musk got their fight coming up. So
yeah, is that going to happen or not? I'd actually, at this point, I'd actually, Musk is probably about twice the size of him, but I'd still.
The pay-per-view, you know what the pay-per-view gross would be on a thing like that? Like that would be just ridiculous.
Yeah, but who's going to be in the who's going to be in the undercard? I mean, can you imagine that?
Maybe we can get like Larry Page to fight somebody or something.
Oh my gosh.
But yeah, so that's just I think the tech earnings are going to be the biggest thing this week because these things are so priced to perfection, and we've had such a great run in tech that I'm expecting a further pullback in tech right now. Short-lived though. Here's the thing that I will tell you, and I've been saying this to my students and stuff for the last week or so. We're definitely in a new bull market, and typically in these bull markets, when they're quiet and trending, heading higher, as we see, you're going to get 3 to 5% pullbacks that happen during those trends, and they kind of set the new higher low and the support, and then you go higher. So we're due for one of those. I could see that happening off of just to sell the news over the next week into early August, which is typically volatile anyways, and then us kind of catching a bid into that next Fed meeting in September and running up. We're so close on these indexes to all-time highs. I don't see how we don't make at least a run at them, if not eclipse them before things fall apart again.
Yeah,
and so that's kind of how I'm seeing this year play out.
I'm definitely seeing by the end of the year, I think that we're challenging the all-time highs, but it's not going to come all at once, and it's not going to come out without a little bit of shake and bake. I mean, I think the best example for this is back in 2020, where we got off the ground really strong. And notice this, we V-bottomed, and right as soon as we started hitting new highs, all of a sudden we went into, I think it was a good 10% correction for about 2 months. And so that may be on tap for right now. Who knows? But we are definitely, if you look at that, from a monthly, the monthly energy was good, but back then, but the weekly was on the ground. I mean, the weekly was below 25, which is something we rarely ever see. So,
well, and that's kind of where we are now, just about, and that's that's actually healthy. I mean, you look at especially in the case of the NASDAQ, to go up 35% in 6 months, essentially. A 10% pullback, you're still up 25% for the year. I mean, that's pretty good, right? So that wouldn't surprise me at all. And I think that's what we're going to see maybe in the next few weeks as we get into August, is just some profit taking on this. Now, remember, NVIDIA doesn't report earnings till later August.
So later August,
like the 17th or something like that.
Yeah, it's actually, so I think it's the 28th.
Yeah, you might be right. And that's the thing is I think that's also a major, major catalyst.
Now, one thing I've been watching lately is like everybody's taking their eye off the ball from energy. Now, energy did all the heavy lifting back in October. So energy did all the heavy lifting to push the Dow up to close to, out of the bear market back in October of last year. And then it's done nothing since. But look at what's happening with energy right now on the daily chart. Plenty of energy and breaking above the 200-day moving average. Strong breakout here. So if you're looking for a place where the money is rotating out of tech and into, it very well could be energy right now. And just looking at some of these sectors that we have right now, today, energy is the leading sector. And financials is also catching a bid as well, too. They had a pretty good earnings season. That's wrapping up right now with the big banks. And let's see who else is there. A little bit of staples. I'm surprised discretionary has made a rebound today, because I think it was Tesla was absolutely blowing it up. And it looks like they've made a nice rebound. Actually, that's a key reversal bar. which is a lower low, and it looks to be a higher close above yesterday's candle, or I should say Friday's candle. So all kinds of things. Yeah, Tesla has had his share lately of this, but also looking at things like AMD. I've been in AMD for quite some time, and it's like, is this going to hold, or is this going to make a lower low, lower high? Is this going to make a lower low and complete a reversal to the downside? So I think by the end of this week, I think, yeah, I agree with what you're saying, Dave, is that we may see a pause. We may see some rotation. I'm of the opinion that when we see stuff like this before, like when you have everything condensed into 1 week, everybody is like, oh man, it's going to be crazy. It's going to be, whipping all around the place, and we're going to have a huge rally or huge sell-off. Rarely does it ever play out like that. It's usually we get a lot of volatility, but very little net movement because everything's already been priced in now.
It'll probably be a fairly flat week, and trading will really start as we get into next week and everything. I think Apple's always a bellwether, so we've got to get through Apple earnings too, which I think is the following week. And so Apple's the most widely traded stock. You've got a lot going on there. So, I mean, it's not that these stocks can't go up, especially with the hype and the AI hype and everything that's happening around them. It's just there's the tech index and these tech stocks are just to a point where they're pretty exhausted on their energies. They're tired, right? So even walking sideways for a few weeks is possible. It doesn't necessarily have to have a massive correction. It doesn't have to go down 10%. You could, we pulled back at the end of last week on the NASDAQ, just a couple percent or so. And we may just stay in that flat range for another week or two, right? And that is what it needs. And that just could be where we're at. I think some of these individually, though, like I said, like Meta, just you look at that chart, that thing's so priced to perfection. If it has any little bit of an issue, you look at Tesla and you look at Netflix, earnings were good and they still got punished. Now Tesla's coming back a little bit, but they still got punished. So I just think, you're going to have some of that, I think, over the next week with some of these stocks.
I've got this chart pulled up here just for perspective, and this is the run that started in 95, and this is where people started to put together, hey, this whole internet thing may be something, even though that who was the Nobel winning prize economist?
Krugman?
Oh yeah, Paul Krugman was like basically, it's a fad, it's a flash in the pan. But this whole move, especially as it got past 98 and that sort of long-term capital thing, really, really like a lot of the same things are going on back there. Like, hey, this can't keep going higher, and this is the whole irrational exuberance thing that Greenspan talked about. So don't be surprised for all of you guys out there if we end up making new highs this year and we go a little bit further than that. Even though things are starting to, the Fed eventually will go too far, and the Fed will tip the apple cart over, I think, as we know.
Well, that's why the language of the Fed's important, because it's an ego thing at this point, right? The Fed board, Powell, doesn't like it when the markets are not, heeding their resolve, if you will, right? So it's like, oh, you're going higher market, I'm going to pound my chest and I'm going to put you in your place. Like that, it gets to be kind of an ego thing with these guys, and that's kind of what we see. And that's why he comes out of like a Jackson Hole event or something and, make this really blunt statement, right, which drives the markets. And they like that power and that control, regardless of how they present themselves. There's that ego piece to it, right? And so I think, again, after this week, we'll see what he says. I think he's going to hit it down the middle of this week, but then you've got Jackson Hole right before the next Fed meeting and stuff. So as I said, I think we maybe run up into that and then we'll break, from there. But the Fed is in a very precarious position. And the reason they are in a very precarious position is they have a choice to make, and they're going to be faced with the choice as things go on, because contrary to what the numbers say, guys, because the way they calculate inflation is a joke. they're literally calculating against really high numbers, right? So you have high inflation, and we're 0.3% above that year over year, but it's coming down. Like, this is, or 3% above that, and they're saying it's coming down. It's not coming down. Inflation was up 10%. We're 0.3 or 3% above that, right? That's the type of thing that we're doing. We're comparing against high numbers. And so at some point, typically in these cycles, inflation does have a resurgence. And what did Doc just say about energy? I've been talking about energy with my students in our mastermind group, since early June, that was the next one. And remember, the underpinning of everything from a cost standpoint is oil. So if oil goes up and we start getting in the $80 plus a barrel range area again, guess what's going to happen with inflation numbers, guys? They're going to go back up. And so the Fed's got this hard choice that they're going to have to deal with. It's either allow inflation or keep raising rates to a point where you could create some serious trouble in the bond market. And I think they're going to choose inflation over really disrupting the bond market, because if they blow up the bond market, it's the largest liquid market in the world. It's the treasury market, it's everything. Then you really have some major problems, right? So I think that's what's going to happen is they're going to keep rates high, but I think they're going to reach a point where they just can't go any higher because of that risk. And so we're going to be sitting there with inflation higher. They probably are going to reset the bar to be, 3% a year is fine. And that's going to be that, because we're already at almost $1 trillion of interest for our debt just this year. And that's climbing at a very rapid clip. In fact, we've added $1 trillion in government spending and deficit since June alone, right? Since we fixed the debt ceiling, right? So that's the problem the Fed's going to have. And that's going to affect everything at some point. And this is bigger macro stuff. But I think that's something, guys, you have to really just key in on. They're going to have that dichotomy or that choice. And at some point, they're going to choose it. And that's going to throw everything out of whack.
Yeah, but your July 4th lunch was 50 cents cheaper this year, wasn't it? Or something like that. I forget the exact number. Man, just anecdotally, I went into a bike store, a truck store this weekend just to pick up some chain lube. And I was shocked. I was like, there wasn't a road bike there that was below $6,000. And I'm like, are you kidding me? These are very nice bikes, but still $6,000.
Triathlon for us, competitive triathlon, a lot of people know that I compete pretty heavy in Ironman, and I've got full carbon race bike and all that stuff that we ride, and these things, used to be like $5,000 or $6,000 was a lot. Now they're 12 to 15. To get a kind of the top of the line ones and stuff, the difference in cost is just incredible, right? So that's what I'm saying. It's kind of a joke to say inflation's coming down, because if you look at what you were paying 2 years ago versus or 3 years ago, right, versus what you're paying now, it's still way up. And that's what happens. That's the sneaky thing about inflation, is when it has these big moves like it does, that becomes the new floor. That becomes the new plateau to jump off to the next one on. And sadly, the Fed loves inflation because you're paying back all this debt with cheaper dollars, right? That doesn't help us as an individual or consumer, but that they love inflation. They would love to have 10% inflation, honestly, because that would make their life so much easier. They just know that if you got 10% inflation ongoing for a while, that's when the pitchforks come out. So they have to tame it down. Nobody notices 2% over 10 years, but 2% over 10 years, guys, is eggs used to be 49 cents. Now they're $1.99, type thing. You don't notice that slowly over time, but that's like the difference that happens in the span of 10 years at 2% even. So it's a horrible thing, inflation. In fact, if you get a chance, I think I've mentioned this before, go to WTFhappened-in-1971.com and just look at those charts. Just scroll down that page and look at what's happened since the dollar was depegged from gold, and look at what happened to your purchasing power and the value of the dollar and everything. It is astounding. So, all right, I'll get off my soapbox on that. But
next thing you know, you're going to be, like fueling up your car out on the, the marathon station, and you're going to be asked, what size tip do you want to leave for the attendant?
Yeah.
It's going to be, if you notice the inflation on tips too, it used to be like 10, they suggested tip 10, 15, 20, and now it starts at 20 and goes higher from there.
Yep.
So it's little insidious things that's happening everywhere. And so it's going to affect everything that we do. So
and that means that you got to keep your money moving and you've got to keep it growing, because if it sits stagnant, it becomes worth less faster.
Opportunity
what
cost.
we do, what it's all about, keeping that money moving.
And you've got to
taking advantage of the opportunities and
you've got to beat the risk-free return right now. Of the
exactly.
What is it? The 3-month Treasury bill.
Yeah, I mean, but you got to beat that, because the inflation's still high. It's still eating away at it, and that's why I said it's kind of an insidious thing. So that's why we sell, because we can control it. We're the insurance company, right? We're selling to the gamblers in the casino. Once in a while, we have a move like we've just seen. We get some trades that have to make some adjustments and get a tailwind every one. But gosh, for the most part, we keep pretty high win rates in what we do and create kind of cash machine that keeps paying us and keeps that money moving, because that's the key. Currency is what it's called because it has to move like a current. If it sits stagnant at all, check out that site. WTF happened in 1971.com. It will blow your mind. So yeah, that's what it's all about.
All right. Just before we depart today, just wanted to throw it open if there's any other questions or any other interaction from those of you that are out there live today, watching us tap dance in person. So go ahead and enter it on the chat box window. But by the way, I am I haven't updated this yet, but please check or maybe I did. I'm doing a presentation tomorrow in the timing research futures and options workshop. So this is the next 3 days. So there's 30 different speakers over the next 3 days that are presenting here. And I'm going tomorrow at 2 o'clock.
We always put on a great event too.
Yeah, I'm going on tomorrow at 2 o'clock. So if it's not in that area, I will update it here like in the next few seconds. But so look for that and opt in, register to that. It's free, and you can kind of go in and watch whatever you want to. You can look forward and you can see who the speakers are, if there's any person that you want to watch. But I'm going to be on tomorrow at 2 o'clock. I'm going to be talking about creating income through weekly options. Looks like we've got a couple of questions coming in.
Okay.
Good faith violation. I don't think I've heard of that before. Let's see. So the question that leaves me is, what is the max number of my account that I should actively engage in option spreads at any given time in order to keep this situation in the future? So I used to have a lot of problems with this when I was early in my trading career, is that like I almost didn't have enough capital to buy back positions. Like I would have to sell something so I could buy something back later on. And so I learned after a while that trading is really a three-legged step stool. This is an Alexander Elder thing, which is there's method, the method of trading. There's mindset, understanding, your mindset and how you think about trading and how you think about risk. There's also money management, and it becomes a three-legged step stool where you've got to have all three legs in balance. Otherwise the whole thing tips over. So to answer your question, it really depends on the risk behind anything. Some strategies will tend to run away in risk. I mean, if you're doing things like naked puts where it's unlimited risk to the downside or upside, then obviously you need a lot more capital to be free for something like that. Or you need to have tighter stops before those things get away with them. Otherwise, if you have limited risk positions, which are limited to maybe $100 per spread or $200 per spread, then it's much simpler to do that. So where I've sort of transitioned in my career is more limited risk positions if we're going to do spreads, and believe it or not, unlimited risk positions for things like naked puts. If I'm really truly setting up things like strangles and out of the money puts and things like that, if you use the right instruments, you can do so with a fair amount of capital efficiency due to the way that they calculate margin. But it requires a different type of account, so that comes with a little bit more experience. But I would say right now for where you are, it's trading with unsettled funds. Okay, so that's the problem then. You need a margin account. So you may just have a cash account, and so it needs to settle first, which can take like 3 days to do something like that. And the problem is you're going to run into you're going to be classified as a pattern day trader.
Pattern day trader, yeah.
And if you have less than 25,000, which puts you in, it's frickin' purgatory. It is awful because you have to have everything settled before you can do anything at all. So you can't have really any open positions that are, I've gotten thrown into jail like that once or twice, and it's terrible. So it's an IRA.
Yeah, the only thing I'll add to that is the way that I look at things. I always, for me, it's always about how do I do things as simple as possible, right? So I used to be like, hey, allocate a certain percentage to a trade and do all that stuff. Frankly, guys, for me, that's just a nightmare to keep up with, honestly. And so my hard and fast rules, I keep 20% of my account always liquid.
Yeah.
So I always have 20% of my account liquid. And then I do mostly high probability trading. And so my bread and butter is like monthly and a little bit longer term trades. So I'll allocate more of the capital to that. And then I do trade weeklies too, and some more speculative type trades. And so I'll allocate a smaller amount. Doc and I like to talk about the income pyramid, right? And so like I'll do naked puts and covered calls. That's like the bottom of the pyramid because really like you either own the stock for a covered call. And if you sell a naked put and, depending on what type of account you're in, you're going to get at least the amount set aside to own the stock, right? So you're fairly secured. Only the fact is like with naked puts and covered calls, if the stock goes to zero, then you got to deal with that, right? So I don't trade on stocks that, are like that. There's certain criteria that I use. We've got a screening process, all that stuff that we go through. And then I actually have a defensive strategy that I employ as soon as I put the trade on that protects me to the downside, right? So that's my bottom. Then it goes up to like my long-term and monthly income. Then it's like the weekly type stuff. And so each level you go up, it's less to that, to where at the end, I'm trading with about 80% of my capital. And I keep that 20% liquid just in case there's a black swan event. There's, trading trades, if you're, like me and have a 90+% win rate, you're going to have, less than 1 in 10 or so go against you at some point, 200 plus trades a year I do. So you can kind of do the math of trades that are going to go against you. So you got to have that money to manage them a little bit. And, while you're maybe freeing up capital and stuff from some of the others while you're doing that. So that's kind of how I look at it. And so hopefully maybe blend what Doc and I said, and maybe that'll help you a little bit.
Well, so
keep yourself in a better.
Back to Pet Sitter, it looks like what happened was that you had enough unsettled transactions to kind of start to build up to your total account equity. So that must have been because I've been trading in IRAs, like 90% of my capital is in IRAs, and I never run into this problem. So now when I say margin account, you have to have a type of margin account just to be able to trade options. So even though you're not using margin, it still requires a margin account to be able to do that. So there is a margin account, there's a cash account. And so a cash account will treat it exactly like you're talking about, where it will say, like it has to have everything settled. Now, margin account, you don't have to have everything settled. It will allow you to sort of like treat that like on margin. But what I would do is I would call up E-Trade, call up their trade desk. Don't call them at 9:30 in the morning. Call them up sometime in the afternoon when it's slow. Talk to the trade desk. Tell them what problem that you had and see if they have any suggestions for you. Or they may even send you to a salesperson that will talk to you about different levels of accounts and what you can do, or what happened. But they should be able to tell you what to do, because I understand what you just went through, and it's really it's unsettling, to put it in a very in a very minor way. It's very unsettling to go through something like that, where all of a sudden you can't do what you need to do. Okay, so, all right, it looks like we are clear. And we wanted to thank you guys for attending and joining us here today. We do this every week, so let us know if you have any questions for next session. You can just shoot us an email, and we'll tee something up for you guys. So everybody have a great Monday. Enjoy the Fed. Get some popcorn for Wednesday, and we'll see you guys next week.
Bye, guys.
All right.